Good afternoon and welcome everyone to the Trading Talk Uncensored live Q&A session. My name is Danny and I will give you the webinar today, and we can begin with the first question we've got here. So the first question is, how much money do I need to trade one lot with gold? Okay, let's copy this question and we'll paste it in our notepad right here, and then we can get on the platform. We'll be using the AvaTrade. This is a platform embedded in the website. That means that you can enjoy this platform without even downloading or installing anything. Just by logging into the website and clicking on the AvaTrade or web trading, and you should see the platform either looks like that or like this, and you can switch the screen. You can extend or minimize by the button right here with the two arrows pointing out or inside. You can also find a similar interface in your personal device on your phone through AvaTrade's trading app. A lot of useful content that you can find in here. We have another webinar for that called the Ultimate Trading Webinar for Beginners. And now let's focus on the question we've got here, which is one lot with gold. Okay, so the first thing is we need the gold displayed here on the chart. There are two ways to do that. One is through commodities manually. So we'll click on commodities and then metals and then gold. Okay, and select it from the list. Another way to do that is just to put it here on the search. So whatever is written here, I'm just going to click it twice to mark everything and then type gold and then select it from the list. Just like this. Okay, still it's copied here, but we can see that we are with gold. Okay, so just for the reference, so prevent any confusion, putting gold and gold. Now, the question is one lot with gold. Okay, first let's understand what is lot. Okay, so lot is a very common measuring unit that you can find in different contracts. And if I'll click buy or sell to enable the side menu here, the order entry and the instrument details. Okay, so it seems like copper is still selected. We'll step outside. We'll type again gold, click on gold, then again click buy, and it resets to the right menu. Then we can extend, and we've got the correct one. Now, what is exact? So if I look at two tabs we've got here, we've got the order entry and we've got the instrument details. If I'll click on instrument details, I can find that how many contracts we've got in one lot for this specific instrument. And we can see that the lot size here is 100. If I'll make comparison with another instrument, just to understand how the lot works, we've got here gold, maybe crude oil, and maybe silver. And now if I'll compare the same, you see one lot is 100 for gold. And now for crude oil, crude oil, let's close gold, and with gold, click here on buy. Okay. Again, we'll try that again, maybe sell. Okay, we'll close that down, and we'll try to refresh, maybe make it 2, just for the comparison, and again, try. Okay, and this time we'll compare, clicking on instrument details, seeing that the lot size for crude oil is 1,000. Okay, so we've got 1,000 for crude oil, and for gold we've got 100. Why does this make any difference? We'll explain in a moment to better understand how to calculate the money that we need, which is called margin and not money. Okay, we'll speak about it in a moment, but let's stick with gold so we can answer the question here. And with gold in mind, we can see now that one lot equals to 100. Great. What does that mean? That means that we have 100 units of gold, 100 ounces of gold. All right, so to understand the necessary amount to trade one lot with gold, we first need to calculate the price per unit. So price per unit is 3,096, almost maybe 7. Okay, let's stick with that because it keeps on moving. And then we've got the number of units, which is 100. Why? Because we saw that one lot is 100, right? Okay, and then we're gonna go price per unit times number of units gives us the value. Of course, users who are using this interface, you don't even need to do this calculation. Why? Because the value is right here. Okay, the value is right here. We don't need to do that, but we're learning how to do it, so we can do this on MT4 and MT5 as well. Okay, so the value here is, we're going to calculate it by ourselves anyway, just for the sake of the discussion, so we can see how it's done. So we're going to take the price per unit, as we said, 1397 times 100, and that is what we've got in here. Now, obviously, with 10,000, I'm not going to be able to trade something that is valued with 300,000, right? Almost 310,000. So we've got another thing here called leverage, which is part of our equation, an essential part. And what this leverage does is it multiplies buying and selling. So again, with 10,000, our account will have the strength as if we had 20 times more, meaning, okay, that with the same logic, we're multiplied by 20, we can divide the value by the factor. So we've got value divided by factor by leverage equals margin requirement. Oh, sorry, in here it's called margin impact. Never mind, that's the same thing. And why is it called like that? Why we're calling it margin impact or margin requirement? Because this is the interpretation that will affect our balance. Okay, we are using not the 10,000 that are in here. We're using a variable margin, which is compared to the leverage, and we can see what percentage that will be. It will be 5% from the value. How can we know that? Again, we can go to instrument details, and we can see that the margin is 5%. 5% of what? 5% of the total value for this position. All right, so what actually happens is I multiply by 20 and I need 5% out of the total value available in my margin, not in my balance, in my margin. All right, now, unfortunately, as we can see, the value here is, even if we will divide the value we've got here, we'll divide it by the leverage. Unfortunately, with the balance that we've got, unfortunately, with the margin available to us, we can't open the position. We don't have enough. Just a second, we'll do it together. Again, this will be the result, but okay, right. Of course, if I would include the difference in decimal, we would get the exact number here, but I haven't because I don't think it's crucial for the solution of the question here. So to answer the question, we've got the solution. We're going to divide it to understand better how it works. The actual value is almost 310,000. The leverage we've got is 20. Therefore, the necessary amount, excuse me, just a moment. The necessary amount for us, the necessary margin for us to be available to open the position is 15,497. Now, if I wish, as an example, to still trade gold, and I want to know what will be my max. Okay, let's suppose we'll go for 80. Okay, and you can make comparison with the balance. Now, it's important also to understand that even if I have the ability to open the position, it still doesn't mean that I should. And I'll explain to you why. For instance, at the moment, we've got the scenario here is 64 ounces. That leads us to a value of almost 200,000, 198 to 96, and keeps moving. and the margin impact will be higher than 99% of our available margin. In this case, what will happen is, if I wish to diversify or to do anything else, I won't have the ability because I don't have enough margin. Furthermore, if the market go against me and I can't comply to my margin requirement of the whole account, not the position, which is a certain level that I cannot exceed. But if I exceed and the margin drops below my margin level, okay, margin level, it's not displayed in here, but you can see it MT4 and MT5, then unfortunately the platform will close my position. So what I would like to do is I would like to open a position with a reasonable amount that allows me to maneuver with the rest of my positions, or just generally to operate my account. Okay, always watch your margin level to make sure your margin is healthy. Okay, now, so this is the answer. The answer is right here. Naturally, we understand that with 10,020, 1 to 20 leverage, unfortunately, this is not a doable position. All right, so what we're going to do is just take what we jot down here and we'll just paste it in our presentation, maybe this way. And also maybe we'll minimize some of the things so it will fit a bit better into the presentation here. Okay. And all right. Again, as I've explained, if something here isn't clear, there is a recording of this webinar. You can go to our YouTube channel, watch it again slowly. Even though this is quite self-explanatory and the calculations here are very basic, still, if you want to recap, it's going to be there. All right. The next question is, how many open positions should I have? Okay, how many open positions? How many open positions? That means that I guess what this question is, how many positions I should have open at the same time? If more than one, maybe 5 or 10 or 50 positions. What do you think, guys? Does it make any difference if I've got 50 positions open or 10 positions open or 100 positions open? So how many positions should I have? Okay, let's make it optional. So we've got A, B, C, and D. Let's make it how many positions? Let's make it 1, 5, 10, 50, or more. What difference does it make if I have one position open or I have 5, 10, or 50 or more? Well, a lot of that depends on my trading style. Okay, there are different trading styles. There is scalping, there is intraday. There is also swing. Okay, under those three, there are a lot of subcategories, a lot of subcategories, which you can play with, and you can interpret those things by your own reference. But I would generally use those three as the general three trading style. Of course, there are other things like copy trading and all kind of signal trading and all kind of things, but those are the main three. Now, what does that mean, scalping? Okay, short positions, active on the market. Okay, what does that mean? It means that if I'm scalping, just like I'm making a sculpture, I will constantly look at the market and decide on the go based on how the based on how the market is moving. And I will typically look at small time frames as I want to understand exactly how the market is moving at the moment. And depending on how it moves at the moment, I can make judgment and see the best decision for me. Okay, in difference from other strategy trading styles, which I can use pending orders, and with pending orders, I can step away from the chart and just do something else. In scalping, I need like a hunter to be on the chart and understand how the market moves so I can better decide how the market is moving. So in this case, at the moment, we can see that gold is ranging around those levels. We're looking at 1 minute. That means that each candle here on the chart will represent 1 minute. That means that generally 10 minutes ago, gold was here. And, oh, sorry, that was almost 20 minutes ago, right? 17 minutes ago. And then 15 minutes beforehand, it wasn't here. And you can see the difference. Now, if I'd be scalping, perhaps if I would get some more confirmation, perhaps I would think that it's bullish, and I will hold a position for a short time frame until I get what I want, and I will maybe make a new position. Okay, that is basically how scalping works. Just the idea. As you can see, if we would buy and it goes a little higher, perhaps we could close. And we can also hedge if we believe that the market will bounce back to the same level, perhaps to keep it open, recover, and then make additional profits. It's a bit complicated to explain it now, so I'd rather not go into that too much, but just to understand the idea here. So if I'm scalping and I have several positions open, it's natural because I might want to close it briefly as the nature of this trading style. If I'm using another trading style, as an example, intra-trading, okay, intra-trading or weekly trading style allows me to use pending orders and hold a position for sometimes over a day, right? So what does that mean? It means that now let's switch from the current candles we're seeing from 1 minute. Let's switch to days. And now I have the liberty to design the position thinking the duration of the position will be a day or more. And then the prices that I'll compare, for instance, I would want to look at something else. Let's maybe choose corn. Has been quite interesting recently. Okay, and we can see that with 1 day, for instance, I don't have to make a decision now. I can place a pending maybe buy. If it gets down and begin to reverse again, I can target 445 as an entry with a buy, and I can place another pending order for the take profit, maybe a little lower than the resistance. Okay, we've got some resistance lines in here. And we can see that this is above the consolidation area. And I can just design those pending orders and then step away. Okay, intraday as well is a natural strategy to have several positions. We can naturally have more than one position because we don't have to manage it at the moment when the market is moving. We can use pending orders and then step away, as I have explained. Of course, if I enjoy looking at the charts and analyzing the charts, regardless to the pending orders, I can do that. But in terms of, so let's say medium length, medium duration positions, let's say a day, maybe up to a week, I'd say. Some people may say up to 10 days, but you know. Active on the market. Can use pending orders. Again, I can also use pending orders with scalping, okay? I can use it. It's not, it's also an option. But in scalping, I would typically decide right away. It's short time frames, because I have explained short time frames, decisions are almost instant. Okay, with intraday, I can watch the market, do my observation, maybe half an hour or an hour to see if the market actually reacts as I expected. And I can expect a confirmation to hope for reversal, maybe to go with the trend and then go bearish. I can do all kind of things, and I can design pending orders and, like I said, step away. That doesn't require me almost. I mean, I can still spend time on the chart and analyze, but it doesn't. It's not as mandatory as scalping. Okay, swing is even a more extended version of intraday and weekly, because in swing I keep my position. I can keep my position open even for several years. Now, let's long duration. Okay, I would roughly say holding for a month or two would be considered okay to swing. And the time that I need to spend on the preparations depends on me. For instance, if I believe that a certain stock, as an example, is interesting these days, and I believe that this stock will recover because I've seen the reports, earning reports, or any other reasons that I might think that this stock is recovering back. So what I can do, I don't even have to analyze minutes or hours. I can analyze weeks or months. And with those candles, again, to simplify, now each candle displayed on the chart is showing us weeks, similarly to what we saw with a minutes candle. And if, for instance, I'll compare the highest level for Tesla at its peak when it was 489, we can see that at the moment, okay, Tesla is 282, and just a sec. Okay, and I don't have to decide based on the minutes whether if it's a sell or a buy. I can analyze weeks and see that on December, Tesla reached almost 500. And I can safely design a position here and maybe pend a buy for maybe even 440 is fine. Maybe a little lower than that. For 427. Well, the market will be open in 2 hours, but you guys get the point. So there are different trading styles, and depending on those different trading styles, I can decide how many positions I want to be. I need to leave open. Okay. Now, if I'm scalping, I need to decide on the go, manage my margin and things right away. So a position up to 5 positions would make sense. If I'm somehow able to scalp with 50 positions, well, everybody can do what they want, but I think it can be very, very challenging. Even 5 to 10, because again, we're talking about minutes to open and close 10, 15 positions. It's, a bit challenging. Intraday, I would again say that the range of 1 to 5 makes sense. Even 5 to 10 is fine. 50 positions, if I have to open and close 50 positions a day, again, it can be good for some people, and I guess that a lot of money can be made with those 50 trades, but it works the other side as well. Now with swing, I don't think there is a limit to how many positions I can take. Okay, just keep in mind about those things that I've explained in the beginning when I've explained about gold. Always pay attention to your margin and ensure that your margin level does not exceed what you've set to yourself in your strategy. Because the more margin you're using, the more margin you will have in the market that you will be exposed with. Okay, I hope it makes sense. So unfortunately, I don't have a specific number to tell you guys, you should have 5 or 10 or 50, because that depends on your time available to manage these positions and your skills as a trader to be able to juggle in between, okay, while watching the margin to ensure that you can perform your strategy. Okay, so what I'm gonna do is write down here the answer. The number of positions kept open depends on the trading style, available time to manage the positions, and the skills that we've got to manage these positions, and the level of skill required to manage the positions. Now, what do I mean by that? If, for instance, I'm a beginner and I decide again to open 50 positions today, and maybe tomorrow I'll open another 50 positions, I'll have 100 positions, which can be great, but the nature of the things is that I'll be using a lot of margin, and due to that, I need a lot of. It's more challenging than to manage 5 or 10 positions. All right. Now, the following question is, how can I find what is worth investing today? Well, this is I showed this yesterday. There is a fun way that I like to use on the website to get easily an idea of what's worth investing today. There are several options here. In Discovery, you can find all kind of analysis ideas that can inspire you about what's worth doing research. And one of my favorites here in this facility is the Market Buzz. And through the Market Buzz, there is this layout with the bubbles in here, and you can also have it like a list, maybe more conservative this way. But I like the bubbles. Somehow it just aligned more nicely. As you can see, the bigger it gets, the more mentions that it has. Tesla has been very mentioned online, and this is why it gets the bigger circle bubble. And we've got Apple, Nvidia, Microsoft, okay, Alibaba, and all kind of interesting things. Let's click on Tesla. And as we can see, there are several parameters in here which we can play with, and we can choose the topic that we would like to research about. Rather than to just generally research about all kind of things, we can focus on maybe the revenue decrease. And through the revenue decrease, we can then understand, go to the market and see the impact. Of course, naturally, good news makes sense that the stock will move higher. Bad news means that the stock can move lower. Remember that there is a thing called ripples, and ripples sometimes doesn't give us the actual trend right away. That means that the market can move a certain way and then move another and then turn around. So when doing analysis, always make sure you don't get caught in the ripples. Okay, sometimes we want the market to do something that it's called confirmation, and then according to that, we will respond. It's not a rule, it's not something we always do. Sometimes the reports are okay. I don't want to slide too much into fundamental analysis, just do it wisely. Okay, there are lots of useful parameters in here. As I have explained, positive news, we can expect positive movement. Negative news, lawsuit and recall, and those kind of things can be the other way around. All right, we can always go back, select another thing. Okay, this is provided to us by the Trading Central. Let's see. Okay, so this is a very nice way. Another way is just to Google it out. I'm using Google all the time. There are also AI tools that helps you find those kind of things. You know what's popular today. The only recommendation that I have in this subject is to make sure that you read in a reliable sources and not just somebody else's opinion. Because if you read somebody else's opinion who is not a big fan of something, and it might not be objective. So just make sure you're using Bloomberg or something reliable that has, if not our website and just Google, just ensure it's a reliable resource and not just somebody else's opinion. All right. So okay, let's just write here one useful way is using the market buzz in our website via the web trader by logging in with your email and password under the discovery tab, which is, just a second, right here. You see there is discovery tab, and under discovery tab we've got the analysis views, market buzz, and first features ideas, all kind of useful things here for you guys to use. The last question that we've got for today is, how can I choose the best trading style for me? I wish that I would notice this. Okay, well, that connects directly to the what I've explained about the trading style, right? So how can I choose? Well, that's almost the same answer that I wrote to the position question, right? Because how can I choose? If, for instance, I'm trading on top of my regular job. Okay, let's suppose that I'm trading on top of my regular job. I have a 9 to 6 job, and I'm trading for additional income, right? Okay, so trading for additional income, I have a full-time job and I want to do scalping, okay? So we spoke about scalping. Scalping is active on the market, okay, and requires me to pay attention constantly to what's happening on the market on small time frames and to react at the moment. Yeah. So to compare that with intraday or weekly or swing for that matter, then they're all medium to long-term duration. What does that mean? It means that I can dedicate a specific time for me during the week that I know that I'm less occupied, and I can specifically make the preparation for that day. And in that day, I can design the positions as I want and set the numbers to what makes sense on my strategy. Okay? Can do the analysis that I need for that specific time. Maybe we'll switch to weeks. Okay, so we've got Euro CAD here, and we can see that it's been quite bullish, right? Maybe just 2 weeks ago, the Euro went down. And we can see, let's keep it like this. Okay, and at the moment we can just place the position the way that fits right, and then we can go away. Okay, if we would be trading, we would be scalping, as I showed 5-10 minutes ago. I'd need to analyze minutes, just like this. Maybe at this point, I would go with a sell. When it's done finishing being bearish, I would go with a buy, just as an example, and so on and so on. Okay, so that's the difference. But when I'm doing this, I have to be active on the market. Active on the market. I won't be able to use pending orders because I might need to hedge, and this things requires me to be on the chart. Okay, I'm not saying that people that work full-time can't scalp. I'm just saying to the question that is referred here, how can I choose the best trading style for me? One of the factors that I would look for is available time and that it will fit to my lifestyle. The second way that I would like to examine if the trading style suits for me is, of course, how much money I'm planning to make and during what time frame. That means how many positions is required for me to take to get the amount that I want to make. For instance, if I wish to make 5,000, let's say, well, with 10,000, maybe a bit less, maybe let's say 20% a month, I'd say 2,000 a month, and I'm aiming for 500 a week and maybe a position once a week. So maybe intraday weekly. Yeah, I can scalp and try and make $500 in a minute or 2 minutes. Okay, or through scalping, maybe to also slice this 500 to several small positions. Maybe to take this 50, this 500 daily and turn it to 500 weekly and then turn it to 100 daily, since if I'm scalping and I trade every day, right? And then this 100 daily, I can decide that I'm trading, maybe I'm taking 5 position at the trading session that I take, so that breaks down to 5 positions, and that's $20 per position. Okay, this is one of the ways to do it. Of course, I'm not, there is no specific rule what's the right way to do it, because each trader has his own way to do it, but this is one of the ways. Of course, if I choose to use swing as my trading style and I'm targeting 500 weekly, it would go the other way around. So 500 weekly turns to 2,000 monthly, and then 2,000 monthly comes down to 2,400, right? Yearly. Okay, and that is just a very general way, but it can be useful. All right, so for that, I think it concludes the answer to the question we've got in here. So let's paste that down. Oh, I forgot to mention here, short time durations. Okay, take it like this, and we will okay, so we'll write here depending on available time, personality, and how can I this expected profit ratio, I can select from the trading styles below. Why did I also add the personality part? Because if I'm a person who likes to watch the chart, and my decisions, I like to make them on the go, and I don't like to use pending orders and hold the positions for days and weeks. I just don't like that. If I am this kind of a trader, I would go with scalping. Okay, if it's the other way around, if I don't like spending more than an hour, 2 hours on the chart, and I like to watch 1 hour, then go away, do something else, okay, so maybe intraday or swing. So this is very flexible, and this is also something that can change. A lot of people don't know that the trading style can change. And besides that, you can also have it hybrid. Okay, you need a bit more time than trading one trading style, but of course you can go hybrid, right? What does that mean, hybrid? It means that I have 10,000 for this account, which I'm scalping with, trading currencies, doing small time frames, and maybe I have a sub account which I can open in 10 seconds in my personal area, and on that account I'll have swing, and I have position kept for longer time frames, maybe weeks or months. Okay, I do recommend to again analyze the margin you're planning to work with and to ensure that your margin is in a sufficient level to allow you to maneuver with more than one trading style. Because if you go hybrid and you mix it on the same account, again, it's more challenging. It's more time demanding and margin demanding. All right, so this is, I think this is what we've got for today. Let me, before we carry on, I would like to share with you the links here. We've got some nice links here to help you gain more education for free through AvaTrade education section. We'll paste it in the chat. The second link here is to help you log in and make a deposit. If you're still on the demo and you want to make a deposit and start moving forward, this is the FAQ and the Health Center. This is for a real account, again, to help you move forward from the demo. And lastly, we've got here an Academy link, which I can also show you how to access that from the website in a matter of seconds. I'm also going to paste that. And lastly, as a bonus, we're gonna have a special promotion code for you guys to enjoy one-on-one session with your personal senior account manager for a premium market review. So we're gonna take this special promotion code, paste it in the chat. You can give it to your senior account manager and he can assist you with one-on-one premium market review. And as I said here, I'm going to show you a nice way to get to the Academy without leaving the website. Let's maybe clean what we've got here. Okay, a good way to go back to the default screen is to click on the icon at the top. Now we can see here to the left at the bottom of those menus, we've got another segment right here at the bottom above the chat. Right here, it's education, and in education we've got the second option is Academy, which takes us to the Academy, and the first option is tutorials. And in tutorials you can find all kind of useful content which can help you enhance your skills. You can see we've got here tutorials about platform review. We've got here more tutorials about trading basics and fundamentals. We've got Forex, trading knowledge, all kind of useful things. And as I said in the beginning, in our YouTube channel, there is a lot of content for you guys to use, a lot of useful content. All right, unfortunately, our time is up for today. Of course, if there are any questions, please let me know before we say goodbye. Any questions about what I said so far? Excellent, excellent. So I hope that today you guys learned at least one thing from this webinar. You are welcome to join us next week. And as I said, the recording of this webinar will be uploaded to our YouTube channel later on. All right, until then, I wish you all best of luck with trading. Have a fruitful week, and until next time, have a good day.